Hi, good afternoon, everyone. This is Derek Bruton, the CEO of Chalice Capital Partners. Welcome to our October webinar. We are going to get started in just a few more minutes as people I can see joining quickly here. But I will be back to you very quickly in like 2 minutes, but we'll just wait a little bit longer for people to join. So thank you. All right. Why don't we get started? It is a couple minutes after the hour, and I always like to, we may start these webinars a little bit late, but we always like to finish on time, and that's very important. I know you all are extremely busy, but thank you for spending an hour at least on your Wednesday afternoon with us. This is Derek Bruton, and I'm the CEO of Chalice Capital Partners. I'm very happy to go over a couple of new things that are going on at Chalice Capital Partners, your broker dealer, and for many of you, your RIA as well. We have some great guest speakers today to talk about some very important topics, and I want to make sure that we get to them as well. But first I want to talk a little bit about the agenda and what we're gonna discuss today. So I said there's going to be some updates that I want to share with you regarding the RIA and the BD, and also regarding the Chalice Advisor Exchange platform, which is many of you participate and use today, and the many services that we provide to you. But I'm going to go into that into a little more detail. It's okay if you don't know anything about the Advisor Exchange right now. I'm going to go into that, and then I'm going to also talk about some new things on the platform. Mike Alcerami, your Chief Compliance Officer, our Chief Compliance Officer, is going to go over some end-of-year compliance items that are very important. And then we have guest speakers joining us from NRS and from FC Distributors. Our gentleman that's joining us from NRS, Med Dano, is going to talk about Reg BI, SEC Reg BI. I know a lot of you know about it, but I'm guessing a lot of you don't know a lot about it yet. That's because the details have been sporadic and quite frankly all over the place. And so Med's going to spend some time trying to rein this all in and give you guys a good idea of what it is and how to be prepared. And then our friends from SC Distributors, Brandon, is going to join us and talk about a new fund, the Opportunities and Wireless Infrastructure Fund. And I've seen this. It's very, very interesting. And I know for a lot of you looking for alternative and non-correlated investments for your clients, this is a good opportunity. And I think you'll enjoy hearing from Brandon. So I'm going to dive right in and talk about our BD and RA. And it's been a while since we talked about this. I know I've spoken to many of you that are on the phone today, but a lot of you have asked, what's going on with the broker dealer? What's the growth been like? What's the growth of the RIA been like? And so let me share that with you. It's actually been quite impressive, and we're really happy with it. Our assets under management now across the BD and the RIA are 1.15 billion. When you think about that, we started this BD and RIA, and many of you joined us over the last 2 years. So to get to 1.15 bill in that amount of time has been tremendous. Clearly, the markets have helped us, but nonetheless, it's mostly through, as you can see here, by adding new advisors. We're up, a compound annual growth rate of 35% from 2017 to now. We're at 104 licensed reps with our RIA and broker dealer. And we just hit $16 million in annualized gross, or we're about to, I should say, hit $16 million in annualized gross revenue, which is tremendous. I mean, you can see this growth pattern here, and by any measure, and by any broker dealer measure, I should say, this has been very encouraging to see. We're still amongst, the broker dealer worlds. We're still a smaller broker dealer. Many of you like that. You appreciate a number of the attributes that come with a smaller broker dealer. But nonetheless, we still want to grow, and there's a lot of benefits to scale in this business today. You know it in your business. We see it in ours. And the larger you get, the more opportunities you have to negotiate pricing with strategic partners, with vendors, with investment companies and such. And so getting to in doubling this revenue over the next year or so is going to be very important to us. But having said that, though, a lot of this growth has come from you all, your ability to grow your business, and many of you have had experienced tremendous growth over the last year or so. One of our good clients back in Tennessee, Morris Nutt, has seen tremendous growth. I know Judd G and his firm have done really well. John Langston continues to just blow away not just me and my colleagues here at Chalice, but the industry and the work he's doing on the private placement side. And so I would love to say that this growth is because of us and our efforts in the home office, but largely it's due to you all and the success that you're having in adding new accounts and adding new clients and adding new revenue to your business. So before I forget, thank you very much for that growth and for that business. And we appreciate every bit of it. And we're here to continue to support you in your growth. One of the reasons that we see the registered rep growth and we see the interest in our firm, and frankly have zero attrition at our firm today, is because of how we distinguish ourselves. One of the things is that we have a squeaky clean broker dealer. And I know that's important in your business and is extremely important in ours, so that you know that you're with a BD and an RIA that has no issues whatsoever, no regulatory issues whatsoever. So that's important. I'm sure many of you use that when you communicate with your clients and prospects. But also our management team and the fact that we've been around now for 2 years. Mike started before me as CCO. Keith Gregg is obviously our chairman, and myself as CCO or CEO. I'm sorry, Mike. CEO have been around for now. We've got our footing, and we feel good about our offering, and we can communicate what we're doing and how we can help your business. But another big part, as you see on the screen here, is distinguish our business by our offering. And that's through the Chalice Financial Network and the actual product, which is called the Chalice Advisor Exchange. But, Keith and I set out a couple of years ago to solve for the pain points in your businesses and solve for the opportunities in your businesses. And I'm going to hit on some of these here, and you've heard me talk about it before, but there is real opportunity here to find ways to save yourself money in your business, to increase your bottom line, and to take advantage of growth opportunities in your business by using this platform. This technology platform was specifically built with advisors of your size in mind and with the capabilities that we know that you need for your business. So as you see here on our wheel here, from starting a business to selling a business, we've brought to you the products and solutions that we know that you're looking for to grow your business. And we've brought them and used our economies of scale with now 50,000 members on the Chalice Financial Network platform. We have 50,000 members, and that allows us to get the pricing and the scale that, and the economies of scale that are often very difficult for you all to get it if you approach these vendors directly. But as you can see on the screen, anything from guaranteed issue health insurance, and I'll talk about that more in a second, to cyber protection. Probably the biggest threat out there to our industry right now are cyber threats. All the way down from HR and payroll to marketing and branding. We've really covered the gamut in terms of these services, and this, more than anything, distinguishes our broker-dealer from many others out there. So here's just an example of the vendors that we've put on our platform, many of them since we last spoke, everything from Gladstone Associates, helping us on M&A business and consulting, to Biz Equity and helping your clients get valuations of their businesses, to Trinet, to Stonecastle, Snappy Kraken on the marketing side. I'm not going to go through all of these. You can go right to Chalice FN and see them all. And they're categorized into, business solutions and technology. But we probably have somewhere on the order of 35 solutions on our platform now, all at discounted prices, all with exclusive Chalice advantages, and all ready for you to just go in and request consultations. And here's the beauty, though, of all this, is that it doesn't cost you anything, because for a membership to Chalice, because if you remember, some 3-4 months ago, we let all of you know that the first year membership of Chalice for 2019 is free to you all, free to all of our advisors on our broker-dealer and RIA. Now, these services will cost you depending on what you choose to use, but going in and engaging in these firms and learning more about them and learning how they can directly save you money in your business or help you capitalize on opportunities, that's not going to cost you anything. So I would definitely urge you to go to chalicefn.com and take a look at these solutions. I wanted to highlight a few of them here, a few new ones that we added, and go into a little bit more detail. Benefit Hub, go in and take a look at this. This is something where several of you came to us and said, we would like something where we can bring benefits and perks to our employees in our firm, and also something that we can bring to our clients where they can get significant discounts on everything from movie tickets to rental cars to hotels to local restaurants, apparel. All of this is accessible today through Benefit Hub. And we're not talking 10, 15% discounts. We're talking things much larger that you can get for yourself, you can get for your employees, and also attain for your clients, importantly, as well. So that's Benefit Hub. You can access that through chalicefn.com. Snappy Kraken. Many of you want to grow your business. You don't want to spend a whole lot of money on expensive marketing and brochures and ads and all the things that cost you a lot of money and sometimes don't get the returns you want. Snappy Kraken is the top firm out there, really leveraging the social media space and allowing you to grow your business and get your brand out there at a fraction of the cost of what it took in the past, by using LinkedIn, by using Facebook, by using Instagram and a number of the platforms that your prospects are on today, and they're not seeing your brand. And Snappy Kraken, in spite of that crazy name, can really provide you with the services to help you do that. So I'd urge you to go take a look at their services on our page and then request a consultation if you're interested in using them. Coalition, this is our cybersecurity protection firm that we've engaged with that will provide you, among other things, a complimentary cybersecurity risk assessment report. I'd urge everyone to take a look at this. Chances are your business has already been hacked. You just don't know it. And Coalition, with this risk assessment report, can go in there, tell you how you've been hacked, who in your firm is doing what, and be able to give you a report free of charge. And then the solutions you can choose, whether it's the insurance to protect yourself. And if you don't have this already, it's not typically covered under E&O. So I would urge you to go take a look at that. And also the technology to help you protect your business as well. Cyber threats, I've gone to a bunch of conferences this year, the number one threat to a business right now. And lastly, probably next to rent, your salaries and human capital and technology on your P&L, probably the fourth largest expense right now is health insurance, I'm guessing. At least that's what I've heard from many advisors. And we've bought through Oasis a very affordable insurance and benefit plan to you that typically is saving people between 20 and 30%. These are real numbers, folks. And you don't have to believe me. You can go in, engage with Oasis, request a consultation, get a side-by-side comparison of your health benefits today for yourself and for your employees, and determine whether you can save that. But we have advisors saving $1,000 a month. Firms with less than 10 employees saving $1,000 a month alone on Oasis. Now, your membership's free. Next year it'll be $1,200, but right now it's free. I'd urge you to go in there and take advantage of this. And so let's just talk about Oasis and how you engage. Because some of you haven't gone to this website. Maybe you have, it just hasn't been a while. Go to chalicefn.com, go to the marketplace, and you'll see affordable employee assurance and benefits. Just click on the tile and you can see all of the information that you need around what Oasis, this PEO that we've worked with, provides to you. And not only are they highly likely to save you money, but chances are the coverage you can get, again, for you and your employees is going to be more comprehensive than what you have today. All you need to do is request a consultation. You'll be directed to the team that works with us, specifically Oasis. They know Chalice, they know our advisors, and they will be able to put a side-by-side quote together. It doesn't matter when your renewal is. It doesn't matter any of that. Just go in and request this consultation. Get this analysis done by Maria Petroni and her team, and be part of this. 336 people that have gotten consultations, 48 people haven't engaged, and there's hundreds that are still in process right now, ready to engage. I'd urge you to go do this. It makes sense, and again, you got a free membership. Why not? Many of you use Succession Link. You're looking to either buy or perhaps, I don't know if there are a lot on the phone looking to sell your business, but you're looking for opportunities to grow your business through acquisition. Why not use Succession Link? It's part of your Chalice membership. You're already Succession Link registered members. So go ahead and go in and use this screen to determine if there's businesses for sale in your area that might be of interest. We recently upgraded Succession Link to add a compatibility score. So I think Steve DeGeorge is on the phone. If Steve uses Chalice, he uses, let's just say, Schwab for custody, he uses Orion for technology, and he's a passive investor. I'm just making this up, Steve. And there's a seller out there with the same characteristics. We assign each of the buyers a compatibility score, a unique compatibility score. So Steve and my compatibility score, assuming I do the same things as Steve, I use the same technology, is going to be very high. That allows the seller to determine who are the most likely candidates for buying a business. This has been unbelievably popular in helping sellers and buyers determine and kind of eliminate the noise of the potential bad, I should say, relationships that may not be a good fit for them. So go take a look at Succession Link if you have any interest whatsoever in acquiring a business. And these are businesses that are anywhere from 5 million in AUM up to several billion in AUM. But they're out there, and we have 50,000 members out there, upwards of 1,000 listings for you to go take a look at. Also with Succession Link and Enhancement is the Message Center. So we're helping you organize the candidates for your business, allowing you to organize those and determine who you've reached out to, who you've heard back from. All of that is in the Message Center now. If you find somebody you're interested in, we now have relationships with both Oak Street Funding and Live Oak. Oak Street is a non-SBA, non-Small Business Administration lender, and Live Oak is an SBA lender. Two choices for you to go in and get the capital that you need, if you need it, to acquire a business. They understand our platform. More importantly, they understand advisors. And so you ought to take a look at this as soon as you can. And lastly, before I move on, referrals are extremely important to us. Every time we add more members to this platform, it allows me and Keith and my colleagues to go get deeper discounts on all of the technology we provide and all of the solutions we provide. So membership growth is very important. As you see here, we have a Give a Month, Get a Month campaign. For each person you refer, you will get 1 month free membership. So as I said earlier, you're free until the end of this year. And then after that, if you refer people, you get additional months of membership. And after 3 referrals, we're throwing in a $100 Amazon gift card as well. So please help us grow. It helps you directly. It's not just for our benefit. It's for you. It has a specific return on investment for you as well. Lastly, I want to talk about our conference. Our national conference is called the Boost Conference. It'll be held in March of 2020 in sunny San Diego, sunny and windy San Diego right now, I might add. And it's at the Kona Kai Resort, a beautiful resort right near the airport in downtown San Diego. We are going to be sending out invitations to all of you on the phone. We hope you can make it out for this conference. We'll be covering a number of things, all the upgrades on the broker-dealer and RIA side, but also everything on the network side as well, the technology platform. So we're happy to present this conference, and we look forward to seeing you out there. And I'm going to turn over the call to Mike El-Sarami, our CCO. Wait, before I do that, some of you asked who to call here at Chalice. I know many of you got our phone numbers, but always important to make sure you know how to reach us. So on the screen, you see our email addresses and our direct lines. JP's got an 800 line, and our commission line is 800 as well. But always feel free to reach out if we can help you grow your business, or obviously help you through an escalation of a problem. I know Mike and I and Keith are definitely dying to help you all grow your business. I participated in many phone calls with all of you on practice management and other things. Please engage me. I love that part of the business, and please do reach out. Now I will turn it over to Mike, who's going to provide us all with some compliance updates. Take it away, Mike.
Thank you, Derek. You can go ahead to the next slide. So it is that time of the year, end of the year, and it's also Halloween season. So keeping in the Halloween season, I will attempt to spook you all into completing your end of year compliance tasks. Even though we all know that you've all been great so far, and I haven't had any problems getting most people to take care of what needs to be done. First on the list are branch inspections. So branch inspections are already underway. In fact, they've been underway since September. We do this annually for all registered branches. We have started with the Southeast United States areas. We will engage a third party where practical and where we can save you money, as opposed to flying people out from the home office. But if you are close and we have a capacity, we will send home office individuals to your location. In anticipation for your branch inspections, I get a lot of questions about, are they going to let me know? Are we going to schedule this? They will definitely be in contact with you, or I will be in contact with you at least a week before to schedule, and we'll do our best to work within your schedules and to be as accommodating as possible. So after the branch inspection is done, we will generate a report with findings and follow-up items. And a lot of you who have already been visited are asking, why haven't I received a report the day after the on-site visit? Is because there's also a lot of things that are being run in the background here, and so it can take several weeks before you receive your ultimate, clean bill of health, hopefully. And as always, we appreciate your assistance. We appreciate you accommodating our auditors, and thank you for taking the time to do this. Next slide, please. So firm element continuing education. As of about a month ago, in the beginning of October, actually, our firm element CE has gone live. For those of you who may be asking, why is my CE different than my partner CE, or why is my CE different than my assistant CE? It's because we actually look through your business and attempt to curate it based upon your specific practices and specific risk areas. So no two people will have the same, or there may be slight differences in the content. And just know that we do that so that everybody has coverage based on their areas of practice. So all licensed individuals will have to complete this by November 30th. There was an email that went out a few weeks ago, or last week, that said November 20th. I answered most saying that this was a typo. It is actually the 30th, so just confirming that. So one of the questions I get most often is, hey, did I already do this just a week ago or a month ago? Well, what you probably, if you've done it outside of the month of October, which is when it went live, what you probably did was your FINRA continuing education. So there are two components, as most of you know, to continuing education. There's that comes from the regulatory agency, FINRA, and then there is the firm element CE, which is what we're talking about now. So yeah, you may have done some continuing education very recently, but this is something separate and distinct and also required. So you'll also notice that along with the modules for Firm Element CE, that there is a module for the annual compliance meeting. Since our next conference is not going to be in the calendar year of 2019, you will have to complete the annual compliance meeting online this year, and next year's in-person conference can count towards CE if you attend in person. Next slide, please. Annual attestations. So we engaged last year a firm called Cypher, who also handles our advertising review system, and they will again be sending out annual attestations. And again, it is required for all individuals who are licensed with the firm. We often get questions like, why is my assistant getting this? And it's probably because they're licensed. So if you have any kind of license, FINRA licenses, we do require that you complete the annual attestations. And then in some key positions, for individuals who are not licensed, we may also ask for annual attestations depending on the position. So if you are licensed, if you did get it, it's because you're licensed. If you did not get it and you are licensed, please contact us. So the most important part of this, I mean, all parts of it are important, but one of the things that gives us visibility into your outside activities is the annual attestation. So what we want to know really is a thorough examination of your outside business activities and outside brokerage accounts, because we use this as a basis to audit our records on file here. And annual attestations are extremely important. If the annual attestation is not completed within the allotted time, it can result in a suspension until you've completed it. So we may suspend your ability to conduct business. Next slide, please. So what we've talked about so far are the end of year 2019 items. What we're going to talk about next is what regulatory landscape on the horizon. The biggest item in 2020 is going to no doubt be Reg BI, which stands for Best Interest. This is the SEC regulation that will essentially replace the previous DOL fiduciary rule. It has much more industry support than the previous rule, but there are still significant compliance challenges, and we are working hard to formulate a plan and implement procedures to meet that challenge. And so don't be surprised if in the first quarter of 2020, we unveil some systems that will help us achieve that, some new forms, new disclosures, and so that will likely be the result of Reg BI. So to have a little more of in-depth discussion of Reg BI, we've asked NRS and Med Dano, the Senior Director of Consulting there at NRS, to give us a more in-depth look at that. Whenever you're ready, Derek, you can go ahead and hand it over to Med. Thanks for coming, Med.
Thank you. Thanks so much. Mike, good afternoon, everyone. Thank you for joining me, and to Chalice for inviting me. It's my pleasure to be here this afternoon. Yes, that is my picture, although in fact I'm a little grayer these days, so we can move on to the next slide there. In brief, in the brief time that I'll be speaking with you, I'll be outlining regulation best interest and also Form CRS, part of a regulatory release adopted in over 1,471 pages. So needless to say, we'll be just scratching the surface, but I hope to leave you with a firm understanding of these new requirements and a foundation upon which to prepare to comply. Typically, as I speak to an audience, I encourage questions. I think in this case, given the very short period of time and the volume of material, instead, I encourage you to note any questions that arise during my portion of the presentation and then email them to your compliance officer, who's informed me he'll be happy to answer those questions when he receives them. I may also skip around a little bit, some slides and bullet points, but the slides are here to outline or guide the conversation and for your reference after the presentation. So Reg BI was passed in June 2019 as one component of a much larger package of releases, including 2 interpretive releases, the adoption of a new summary disclosure form, and Reg BI, which sets forth a new legal standard applicable to broker-dealers and representatives providing brokerage services to retail clients. The new legal standard requires that broker-dealers and reps act in the best interest of retail customers at the time the recommendation is made, without putting the financial or other interests of the broker-dealer or representative ahead of the interests of the customer. Now, anyone on the call with a passing familiarity with investment advisor regulation will recognize many of the elements of this standard as echoing the fiduciary duty. Yet, while the regulation BI draws upon the principles of fiduciary duty, it has been adapted to be workable in a broker-dealer's transaction-based business. They're really not the same. And in fact, the SEC has received quite a bit of criticism as a result of them not being the same. Some of the critical differences under Reg BI, that standard applies to retail customers. Fiduciary duty standard applies regardless of the nature of the client, retail, institutional, or otherwise. Under Reg BI, the standard applies at the time of the recommendation. Under the fiduciary duty, that duty applies at all times. So Reg BI includes 4 component obligations: disclosure, care, conflict of interest, compliance, and we will walk through each of these in turn in a separate slide. So we'll move on to the next slide, please. Before we start looking at those terms, I just want to quickly point out that best interest, interestingly, was not defined in the regulation. Instead, the SEC has said this is going to be a facts and circumstances test. For example, the SEC noted that if a broker-dealer agrees to monitor a retail customer's brokerage account on a regular basis, let's say quarterly, and to recommend changes as appropriate, and if that broker either fails to review or provides no recommendations in any given quarter, that silence, according to the SEC, is an implicit hold recommendation, or implicit hold recommendations, depending on the number of holdings that the client has or customer has. And that those implicit hold recommendations would be subject to Reg BI and may be considered a violation of the rule if, under the circumstances of the particular customer, a hold recommendation would not be in that customer's best interest. So keep that in mind. Next slide, please. And let's turn our attention to each of these component obligations, the first of which is the disclosure obligation. This obligation mandates that prior to or at the time of a recommendation, the broker-dealer or representative provide the retail customer with full and fair disclosure, no longer reasonable disclosure, full and fair disclosure of 2 things. 1, all material facts relating to the scope and terms of the relationship, and 2, conflicts of interest that might incline the broker-dealer or the representative to make a recommendation that is biased or in the firm's or the representative's own interest. With respect to those conflicts of interest disclosures, the SEC recommended discussing, as applicable, things such as proprietary products, incentives to recommend one share class over another, incentives to recommend rollovers or transfers from one type of account or another, all material, all conflicts that must be disclosed. Also, how the firm determines how to allocate limited investment opportunities among retail customers, such as IPOs. And finally, while representatives can rely on firm-level disclosures, the SEC has said that if the representative knows or should know that those disclosures are insufficient, the representative has an obligation to supplement those disclosures. Next slide, please. Obligation number 2 under Reg BI, again, the standard under Regulation BI is the retail customer's best interest, not simply suitability, and that's a change. So to ensure that the representative has a reasonable belief that recommendations made are made in the retail customer's best interest, he or she must understand 2 things. First, the customer's financial circumstances, and keep this information current from time to time. And second, the product or security being recommended. Specifically, the SEC listed a number of factors that should be considered to ensure that the rep has made some reasonable inquiry into the potential risks or rewards of a product or security that would be recommended. And those include any characteristics or special features of a product, the liquidity of the product or security, risks and potential benefits, volatility and likely performance through various market and economic conditions, expected return, any other reasonable alternatives, and any financial incentives that the rep or the broker has to recommend one product over any other reasonably available alternatives. This evaluation must then be considered in the context of and aligned with the customer's investment profile, which includes their other investments, age, tax status, investment objectives, time horizon, risk tolerance, and you've heard all of those factors in the past. So, and finally, those recommendations cannot be viewed in isolation, but in the context of a series of recommendations as well. Before I move off this slide, I would mention that while it is not specifically mandated, we typically recommend contemporaneous documentation of recommendations involving complex or risky investments under Reg BI, or an investment that may on the surface appear to not be appropriate or suitable for the retail customer and delineate those circumstances that were taken into consideration in making that recommendation, and do make it in the best interest of the client. Next slide, please. The third obligation under Reg BI, this conflicts of interest. So this includes two basic requirements. Broker-dealers must create and enforce written policies and procedures reasonably designed to identify and disclose or eliminate material conflicts of interest that may create incentives to place the broker-dealers or representatives' interest ahead of the retail customer, and to disclose and in some cases mitigate material conflicts of interest arising from financial incentives associated with a recommendation, such as, again, only recommending proprietary products or other limitations on recommendations. In fact, so under Reg BI, broker-dealers must eliminate sales contests, sales quotas, bonuses, and non-cash compensation that is based on the sale of specific securities or products or types of securities within a limited period of time. That brings us to our next slide and the final obligation under Reg BI, and that is broker-dealers must adopt written policies and procedures reasonably designed to achieve compliance with the entirety of the regulation, including not just the written policies and procedures to address, mitigate, and in some cases eliminate conflicts, but also written policies and procedures that address controls, how the firm will remediate non-compliance, training of representatives and associated persons, and a periodic review and sample testing. So needless to say, ensuring readiness for Reg BI ahead of June 2020 will require significant investment in time and resources, so more to come, I'm sure, on this. So let's turn our attention now quickly to the adoption of Form CRS. So also adopted in June 2019, Form CRS is designed to reduce the confusion of retail investors in the marketplace for brokerage or advisory services, and to help them make informed decisions regarding whether to engage an advisor over a broker or vice versa, to facilitate comparisons among firms and financial professionals, and to encourage retail investors to ask important and informed questions of their financial professionals. An important note about Form CRS, it is not a form in the traditional sense that it is not a pre-created document that you'll be completing by checking boxes and filling in blanks. Instead, it consists of a series of instructions for creating and formatting this new disclosure. Here you also see the definition of retail investors. It's important for a couple of reasons. So I'm going to walk through it quickly. Natural person or the legal representative, that's a non-professional legal representative of such a natural person who seeks to receive or receives services primarily for personal, family, or household purposes. So note that the client's financial net worth is not a factor here. If Bill Gates walks through your door, same kind of disclosures have to be delivered because he's a natural person. So, however, firms must take the level of financial sophistication into account when drafting disclosure and determining the level of detail in the plain English style. Also, final point on this, sometimes it might not be clear why the retail investor is seeking services at the outset of the relationship. So prudence suggests, and the SEC suggests, if you're not sure, deliver the Form CRS. Next slide, please. So why another disclosure document? Again, the SEC recognized that in both investment advisors and broker-dealers play valuable and distinct roles in the financial services industry since at least the 1990s. The boundaries between these two have blurred, with certain broker-dealers charging asset-based fees and reps calling themselves financial advisors or advisors, though they were not registered as advisors. And this was concerning to regulators because of the different standards of conduct and the various conflicts of interest that can arise. And in fact, in 2005, the SEC tried to pass a rule to address some of that. It was nicknamed the Merrill Rule. That was later overturned. But ultimately, these concerns reached Congress, and in 2010, when they passed the Dodd-Frank Act, They required that the SEC conduct a study regarding the different regulatory approaches of IAs and BDs and the resulting impact on retail investors. And what they discovered was, one, that retail investors expect advice to be in their best interest. Two, that the legal obligations imposed on financial professionals did not match these expectations. And three, that while IAs and BDs are subject to different standards, retail investors generally were unaware of or were confused by those different standards. And as a result, we end up now with both Regulation BI and this new summary disclosure document, which is designed to highlight salient information with cross-references to more detailed information. Next slide, please. So in my last couple of minutes here, just a couple of things about the features of Form CRS. It may not exceed 2 pages. So given that both investment advisors and now broker-dealers under Reg BI have an obligation to provide, quote, full and fair disclosure regarding fees and services and conflicts, this page limit, understandably, has made and continues to make people nervous, and rightly so. The SEC's response to that is that it will not view Form CRS in isolation. They understand it is intended to be a summary that is a first layer, that the firm should make liberal use of cross-references to more detailed information, and be sure that supplementary disclosure that's cross-referenced is complete. The form is in a question-answer format. It's designed to be accessible and facilitate comparisons, and it can be in paper or electronic format. If it's in electronic format, it will have to be delivered electronically, and it can only be delivered electronically in accordance with the SEC's interpretive releases from the mid-1990s, I would say, the days of dial-up internet. And that, so I would encourage you to take a look at those releases if you will make use of electronic delivery. Next slide, please. So the instructions you see, there's 5 items, number of subheaders. It must be in plain English. My experience that otherwise intelligent people sometimes have difficulty writing in plain English. Keep sentences short, concrete, everyday words, no legalese or jargon. An important note that terms such as load or asset-based fee are considered jargon according to the SEC, and if used, must be explained, which is taking up valuable real estate. Notwithstanding the enormous amounts of information that we must include in 2 pages, the SEC has also encouraged the use of white space to make the form visually appealing, user-friendly. So it's going to be a challenge. Next slide, please. Most of the items include conversation starters, which are specific questions that retail investors are encouraged to ask their financial professionals. Generally, these must be included. However, if they are completely inapplicable or the wording required is inaccurate, firms may omit or modify those responses. Next slide, please. Here we just see the order of the form. These are the specific questions in the order that they are to be addressed in the instructions. The one thing I'll say about here, because I'm running up against my time, is that it must be in this order because the SEC said it will be machine readable and in that way facilitate comparisons. So the SEC Commission has said that they'll specifically use this information to manage their regulatory and examination programs. So that's an important side note. Next slide, please. Here we have a little bit of information regarding initial first-time delivery for both new and prospective clients, as well as first-time delivery for existing clients. I'll also just note that firms are required to file an update within 30 days if information on the form becomes materially inaccurate, and you're required to communicate those changes to existing retail investors within 60 days after those updates become required. Next slide, please. I am out of time, so I'm going to leave you with this slide here, which is just some considerations for preparing the Form CRS, some things to get you started, and hopefully they are helpful. You can cross-reference them at your leisure. Next slide, please. The initial filing, I should mention, of Form CRS by investment advisors and broker-dealers providing services to retail clients must be made between May 1st and June 30th, 2020. And lastly, here we see on this slide, NRS has been very busy preparing and are ready with tools and services to help firms meet these requirements. If you'd like assistance, please do not hesitate to contact us. So that's it in a nutshell. Thank you so much for your attention. I know that was a lot of information in a short period of time.
Med, thank you very much. Appreciate it. We're going to move to the next speaker, but I want to obviously underscore the importance of Reg BI and your attention to these matters. If you have questions, feel free to reach out to Mike. I know, Med, I'm probably going to get the question, is your presentation available? I'm guessing the answer is yes, and we can get it out to our advisors if that's okay.
Absolutely. Thank you. Sure.
Good. All right, we're going to move on, and I want to introduce Brandon Hunt at SC Fund Management. Brandon has been a great partner with Chalice. They've got a great product. I'm going to let him dive into it, and we may go a little bit over, but I appreciate your patience, and take it away, Brandon.
Sure. Hey, thank you, Derek, and the Chalice team for having me on today. I understand, 8 to 10 minutes is not enough to delve really into sort of the U.S. market summary for wireless infrastructure and sort of how we're attacking that. But I did want to offer up, we have electronic and technology platform that allows you to log in and access recorded webinars and video content for your reviews if you wanted to, spend an hour or so and get kind of a little bit better depth and breadth of our platform. So I'll start with strategic capital at a high level. SC Distributors is really our affiliated dealer manager. We've raised about $5 billion over the last 9 or so years across various flavors of alternative asset classes, from traditional commercial real estate to data center real estate, renewable energy infrastructure, private credit investments, and of those, we still our sponsor companies manage about $4.2 billion. That helps solidify our balance sheet and income that's stable and puts us in a good position as we drive performance fees and annual management fees from those assets. So we started looking into the wireless infrastructure space a couple of years ago and met up with a great group and a gentleman by the name of Jerry Sullivan, who we met through the lead attorney of AT&T's tower division. And so over that time, we developed a business case and a financial model and strategy to invest in the wireless infrastructure asset class. And Derek mentioned on the front end of the call the importance and sort of emphasized, finding appropriate non-correlated investments. And these are just things that don't, jive with the overall performance of your stocks or equities market investments, your fixed income investments, and largely your, existing illiquid or real estate holdings that your clients may have already allocated to. The wireless infrastructure space really has greatly different demand drivers that are really driving valuations in the marketplace and ultimately performance and NAV growth. So at a high level, just so you understand just top level the structure, this is a $100 million equity offering, expandable up to $200 million. It's a private placement. So this is a Reg D 506B, really designed for the accredited investor audience, particularly the high net worth groups that are looking for more of a total return performance. They want non-correlated, both performance and non-correlated cash flow streams. And they're looking for not just the income, but really the total return play. So in our model and in our strategy, we've got a target allocation of 55% to cell phone towers, 20% to wireless easement contracts, 15% to fiber optic networks. And I'll tell you, those three categories are going to make up the vast majority that we anticipate in the portfolio mix. Small cell and distributed antenna systems collectively can make up to 10% of our allocation. It's a $50,000 minimum investment. However, I'd say, if you have an individual circumstance that really wants to, they're an accredited investor that fits, we can potentially go a little bit below that minimum as needed with approval. I'll go through quickly on adding tenants to these towers and a little bit how the economics behind that works. Fiber optic networks, how we're seeking out development opportunities, and what the tenants look like. There's some similarities here to commercial real estate fundamentals where you have, a 10-year lease with 5 to 7 year opt-out renewal periods subsequently. And generally, your rental income is going up by 2 to 3% by contract over the term of that lease. And a great management team with over 135 billion of transaction and financing experience in the telecom and wireless space, and collectively between the three executives, over 85 years in the business. And if we want to jump to the next slide, thank you. Wireless data consumption, as you can see, just since the last few years, since 2016, is essentially doubling every 2 years at this point. We see that in our usage of smartphones and tablets and wearable devices. And if you jump to the next slide, when we look at the Cisco Visual Networking Index, which puts out a forecast of a 5-year period, and this is numbers from 2016 going into expected 2021 numbers, you can see that mobile data traffic is expected to increase a total of 600%. And I'll tell you, just since the introduction of the iPhone alone, which was about 12 years ago, the data network traffic on AT&T's platform is up over 250,000%. They're incredible growth numbers. You see mobile video traffic is actually one of the largest drivers in the sector, as we can now stream HD 4K video on our mobile devices, something that on 2G and 3G was just, we thought would be, impossible. Next slide. The data continues to explode in the amount and the velocity. And one of the reasons for that is a market that's already here today, but that is expanding rapidly in the next 3 to 5 years. And that is what we call the IoT sector, or the Internet of Things. And that's essentially connected devices, or smart objects that are connected to the internet in some way. Intel predicts there will be about $200 billion devices, they estimate, by next year. That's roughly 26 devices connected to the internet per human being on the planet. And that's growing at a compound annual growth rate of roughly 27% a year. Huge amount of spending globally. They're approximating about $15 trillion in investment in the sector. So that level of growth that we're seeing in data, what that's doing is it's weighing down the carrier networks and the throughput that you get on your mobile devices and your home internet, your wireless internet. And next slide, please. What we find is that the performance of infrastructure in the wireless space doesn't necessarily correlate well with the economy, and it doesn't really correlate with other asset types in the real asset sector. It more correlates with the introduction of new technologies. And so if we think back to 2G, which was your flip phone, right? And we had SMS texting. That the build out of 2G to 3G was about $17 billion a year in just wireless capital expenditures or capital investments from the top 5 carriers. As you can see, every time they have a new technology rollout, their carrier investment increases. And so it's roughly $23 billion a year for 3G, roughly $30 billion plus a year into the 4G and 4G LTE advanced technologies. And if you jump to the next slide, you can see the GSMA intelligence report and predictions going into 2024 is that this will be, the 5G, or the 5th generation of wireless technology, which is, promises faster speeds, lower latency, and probably most importantly, very high bandwidth, which is what allows you to connect more devices to the current network. The expected spending looks like it's going to jump into the $40 to $47 billion range, and this is, again, only wireless infrastructure, not including cable and fiber. And this is really only the top 4 wireless carriers in the country in the United States. So they're spending big, and again, that spurs growth in the wireless infrastructure space, and that also spurs valuations. And so that's why you're seeing in the public markets, companies like American Tower, Crown Castle, SBA Communications are really trading at pretty frothy multiples at anywhere from 25 to earlier this year they're trading at almost SBA was at almost a 30 times multiple of EBITDA. We find that we can acquire assets significantly below where the public markets are in the private space. So we're looking at generally kind of the 18 to 23, 18 to 24 times cash flow, and we're essentially an aggregator. We're buying 1 to 10, 20, assets at a time, aggregating them into a portfolio. At full deployment, we would expect that'd be just north of, about 200 million in size, and look to exit through a portfolio sale or merger of the company. And so as we run up on time, I'll go to the next slide just briefly on the management team. The CEO is Jerry Sullivan. He's been in the business about 33 years and has run over 12 different portfolio companies. He's back in 1999. He was president of Tritel Communications and essentially listed on the stock exchange, and then later sold that to AT&T. It was about a $5.3 billion transaction that he was led that merger transaction. Todd Rowley, our CIO, had actually owned a spectrum and broadcast company, which he sold to Sprint PCS, which is how he got involved and became an employee and owner, a partner at director at Sprint, where he was there for subsequently for 18 years, and most recently as head of strategy for the PCS. Scott Riggs is really our fiber and operations expert. Has worked with Jerry Sullivan for 28 of the last 33 years. And they started a fiber business in 2011 with 25 million in seed capital from Stevens out of Little Rock, Arkansas, and turned that into, they just sold that business for 359 million in January this year for a 28 times multiple of EBITDA, which is one of the highest in fiber history, and a great success story. We kind of had to wait for them to sell that business to transition them onto our platform and be solely focused on our strategic wireless infrastructure platform. Very quickly, just so you understand the economics of the way these towers work, if we could jump to a slide down. We just acquired in end of July a portfolio of 7 towers with closing costs included, about $4 million for 100% ownership. They're only about 50% tower capacity, so meaning we could stack on about double the amount of equipment that is currently on the towers. There's about 2% rent escalators on an average 12-year lease remaining, and over 85% of the revenue comes from the top 5 U.S. carriers. We purchased this at an 18 times multiple, which is well below market, and the reason was there was a lot of legal contract cleanup work to do. We bring a deep bench of experience on operational experience that the bigger guys, they can outbid us, but they really just don't generally want to spend that much time cleaning up contract. And so we were willing to put in 3.5, 4 months of work prior to closing on the asset, where we could bring that to an institutional quality or grade of asset portfolio, and we think immediately create value. One more slide, please. And this is sort of a hypothetical 7-tower portfolio that looks very similar to the Eastern Iowa portfolio. And this is really where the power of wireless infrastructure and the sort of growth opportunity that exists here. If you just look at your tower cash flow, several lines down, it's $200,000 after you net out all your operating expenses. The power of adding only 4 tenants is pretty incredible. If you look at our model says we have a high probability of adding 8 tenants. That's about 1.14 tenants per pole, right? That's not very much. That would increase your operating revenue significantly to $354,000 approximately. And when you value that asset, even if there was no change in multiple, the value would increase in this hypothetical 77%. And if we went up in multiple on our exit, closer to where the public markets are trading, you can see that you're essentially doubling the value of that asset, about 104% growth over a 3 to 5 year period of lease up. So that's really the power of the total return strategy, the growth opportunity that we see in the wireless sector. And on the last slide, it just summarizes sort of the barriers to entry. This is a niche, complex, relationship-driven market. It's a very big business, but very few companies in the space. You have to have a management team that's been in the sector, that knows people. Everyone knows each other in this sector. 4 companies own over half of the U.S. infrastructure in the wireless business. It's an underserved market. We need to add 50 to 60,000 new cell sites per year, according to the FCC estimates, which the FCC regulates and governs this sector. The tenants are very sticky for various reasons. It's very expensive. There's a capital intensive to put the equipment and run the lines up to the equipment that essentially give you your wireless connectivity to your phones and mobile devices. This allows us to pay steady monthly distributions from the operating leases that are generating cash flow. We're currently paying cash flow. Let's say on the Chalice platform, we have our brokerage share classes available. It's about a 5.56% distribution rate to the clients. We're not about delivering you the highest level of income in the market. It's really about a compelling total return versus your risk. And so our mid-case model right now is about a 12 to 15% IRR based on a 5-year hold. So great growth opportunity, particularly with the rollout of 5G and the Internet of Things continuing demand and frankly our addiction, not only here in the US, but globally to our smartphones. We're glued to our phones. We're checking them anywhere from 80 to 300 times per day. And they actually have a new phobia these days that has actually logged into the science records. It's nomophobia. It's the fear of being without one's mobile device. And it's a bit scary, but that is actually driving the market. It's changing the way we live, work, and play. So I'll leave you here today with, we're available to help you walk through the strategy, structure, any questions you might have. We've got a great online advisor portal for due diligence, for client materials. All PPMs to go to clients can be generated electronically. And Chalice also allows us to use our e-signature platform. So if you wanted to actually use DocuSign to sign subscription agreements and the necessary forms, you can do that all through our online advisor portal. And our sales distribution team's main line is at the top there. So I would encourage you to register. And also, if you have any questions, please send them our way. We're happy to work with you, and we appreciate the partnership with the Chalice Network. So thanks for having me on today.
Hey, Brandon, thank you very much. And I didn't give you enough, both our speakers, enough time in the beginning. So my apologies. Thank you, everyone on the phone, for hanging a little bit later. But just on the SE product, I mean, just a great product playing into one of the fastest growing industries and trends in the business in the United States and in the world, in fact. And so not only do we have great partners, but these guys at SE Distributors, Brandon and his team, really understand the advisor business, understand your clients, and they make it, as you can tell here, super easy to engage with them. So please reach out and talk to the team at SE Distributors, and if they're right for your clients, that would be great for you and your business as well. So let me end the call here. First of all, I want to thank you all very, very much for your business. As always, please, again, feel free to reach out to us if we can be of any help whatsoever to you. I want to wish you a great November and a great fourth quarter for that matter. We'll be reaching out shortly with our November monthly phone call and the date on that. I would encourage you to attend. And then lastly, happy Halloween, everyone, and have a great time tomorrow. I plan to once again take home the trophy for best costume at Chalice, and we'll share our photos from the home office with you all. Have a great afternoon, great evening, and talk to you soon. Bye-bye.